Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.
Matt Justice here for Tackle Trading to give you a little bit of an update on what's happening in the market today. Today was really kind of the start of the economic week in the marketplace. And for those of you who are very new to the market, you got to understand that there's three things that really kind of drive the financial markets. You have behavioral analysis, which is just overall fear and greed in the marketplace. Greed drives markets up, fear drives markets down. And there's always an element of both fear and greed in the marketplace. The second thing is technical analysis, patterns, trends, support resistance, indicators, Fibonacci's, momentum. And that's largely what we trade on. But in terms of what drives the technicals, in terms of what drives the behaviorals, it is economic analysis. Economic analysis is the number one thing that drives market. And that's why whenever I give a seminar for Rich Dad or for, when I'm talking about trading to new traders, I always talk to them about economic analysis and economic theory and economics in general. And it's because it drives the market. It's the number one things that drive the market. People want to come into the market and they just say, oh, just give me a strategy. Well, really, if you don't understand economic analysis, then it doesn't matter the strategy because you're not going to be prepared for what comes at you. So when I talk about the start of the economic week, I'm talking about when the economic reports come out. Now, we get economic reports literally for everything, for unemployment, for consumer sentiment, for inflation, for manufacturing, for housing, for retail, anything that has anything to do with consumers, for the FOMC. And it really kind of tells us how well the economy is performing. That's based on GDP. So today we got retail sales. And in the latest sign of the broken economy and utterly broken financial markets right now, retail sales went down today. The expectation was to come in at 0.3. It came in at 0. Core retail sales was 0.4. It came in at 0.1. And if you ever want to know the difference in those two, just hit the little folder button, and then you can read about what it is. One of them excludes the automotive industry. Okay, so core retail sales excludes automotive industry, but both of them are fairly similar. So two things happen when you get an economic report, whether it goes up or down from here. It's going to impact every marketplace, number one. You're going to see the markets move, number one. And number two, you're going to see GDP, which the estimates for GDP, which is our economy, our national economy, they will get revised. And if you have a negative economic report, they're going to be revised lower. If you have a positive economic report, the GDP for the second quarter will revised upwards. So here we have a negative report, came in at 0, was expected at 0.3. Now, what's going on in the financial markets is negative news is good news. And that doesn't make any sense if you're new to the market. But what the market wants more than anything right now, okay, is quantitative easing for and low interest rates. This is the greed behind the marketplace. This is the utter failure of the FOMC, the Fed, the central bank. This is the failure of Wall Street. This is a failure of financial markets as a whole, is they're so greedy over free money. And they're going to be wrong. And that's why when the Fed raises interest rates, it's going to have a dramatic impact, or it should have a dramatic impact, I should say. So let's come over here to the market and let's see kind of how the market responded to the information on the Fed. So here, let's look at a 15-minute chart. Now, the information came out right here. And initially, when the information came out, the markets drove down, and they drove down for about 30 minutes, popped all the way back up, and now are coming back down. And so initially the market didn't know how to take the retail sales. They did what it was supposed to do, and then it bought the dip like it always does. So initially went down, then you buy the dip, drives it back up, and then ultimately comes back down. So a very, very mixed response in the financial markets to the overall retail sales. And if things behave the way they should, it should drive down, should continue to drive down, even and especially with the marketplace still kind of hovering at this resistance level right there. And so it pops back up, but now you're starting to come back down. I think it's going to kind of sell throughout the rest of the day, but who knows? It's a very mixed response. I would put it at 55% to 45% probability that it sells the rest of the day. So that's kind of how I'm seeing the report, kind of moving on the way down here. Now, also, how did it impact the currency? And this is where you have the truest signal. Okay, so I'm going to drop down to that same 15-minute chart. Actually, we're going to drop down to a 5-minute chart. Now look at this movement. Now this market is true. And what I mean by that, the true market is you basically have economic analysis that is embedded in the price action. And so when the economy gets worse, the dollar's going to get worse. When the economy gets better, the dollar's going to get better. And typically that's how it works. And so here on the euro dollar pair, the report came out and it drives up in price action. That's what we call a news-based trade or a news-based event. Now, one of the problems with the news-based trade recently, and I think this will get a little better over time, is the liquidity on these news-based trades. And we're getting bad fill rates is what we're getting. And if we constantly get bad fill rates, we'll go to another broker and talk to them about their fill rates on economic analysis. So, but I'll handle that. So now you can initially react to this news-based trade here in a couple different ways. Number one, you can place an order right above resistance here and below support there and get filled on the event, but there's been some bad slippage lately. Or two, you can wait for that first retracement. And as you can see here, okay, this is where we're getting that first retracement. So you can wait for that and then buy it after the event is over, and then the momentum continues. So here we got retail sales coming out. It's impacting all the markets. The S&P 500 was very mixed, and the dollar was very weak on the report. And that's just on the euro dollar, but you could see it on other pairs too. So for example, here is the dollar yen pair. Here's the event. Boom, drives back down. Here is the pound. Here's the event. Boom, drives up. So it's going to impact the forex market the most, but in terms of the stock market, we do have a mixed signal here. Hope you enjoyed the video on economic analysis, economic reports, how it impacts the marketplace, and especially for those new traders out there, it's very important that you start identifying how these economic reports impact the marketplace itself. And if the first time you do it, it doesn't make a lot of sense. But next month, the month after, all of a sudden you start to see how important economic reports are, how they impact the market, and with that experience, you can start utilizing the information to actually profit in that environment. This is Matt Justice for Tackle Trading. Hope you enjoyed the video. If you want to continue discussing economic reports or the Forex report or the options report, go over there to the clubhouse in Tackle Trading and participate over there. Matt Justice, once again, Tackle Trading, signing off.